think that's interesting. The fact you've got a bunch of operating companies, publicly traded operating companies like Marathon that are here in size. I mean, big sponsor, and all the other public and private Bitcoin miners. I think you would have seen the Bitcoin miners private, but you only went back 4 years. You didn't see any public operating companies. You didn't see any public investment trusts. You didn't see any politicians. I don't think they would have. Well, first of all, they just wouldn't have any interest. It just would, other than squash it out like a bug. Maybe negative interest, but no positive interest, and not a lot of enthusiasm. And now I think they can't help but be interested. So I think sometimes the message is the message, and sometimes half the success in life is just showing up, right? The fact that you're there is sending the message regardless of what comes out of your mouth. And I know in the world of, say, public companies or Wall Street, the worst thing is not for someone to hate you. The worst thing is for them to be indifferent to you and view you as irrelevant. And so, that's a kiss of death is you're irrelevant. I don't even think about you. A lot of people don't like Tesla stock, and a lot of people short it, but it's not profitable. There's probably $20 billion of short interest in MicroStrategy, but then they go long Bitcoin. And I think it's good if they just get up every day and they hate on us or like on us. It doesn't matter. What matters is they're engaged. And so I think this week is all about engagement. You just see engagement across. There are celebrities, there are politicians, there are investors, and then there are Bitcoiners, and then there are the engineers, the technologists. They all come together, and this is presumably. It feels like this is the richest. Most energetic gathering of Bitcoin in a long time. Maybe the one that I remember is most energetic.
Yeah, I mean, it seems absolutely unreal to me. I remember my first Bitcoin conference was in 2013 in New York, and it was just like an empty exhibitor hall. There was a bunch of companies that had booths that they paid for that no one was standing at. Some of them had booth babes that they overpaid for. And most of those businesses have gone out of business. And it's just if you look at the last 10 years, last 11 years, it's been absolutely astounding the pace of growth of this space. And it definitely feels like it's accelerating. Even just this week feels like a decade almost in terms of progress, in terms of Bitcoin's recognition. I mean, I agree with you. You definitely cannot argue that Bitcoin is irrelevant. It's definitely more relevant than it's ever been. We have more haters than we've ever had. We've had more lovers than we've ever had. And it's just been crazy to watch. So, Michael, you have basically made a name for yourself with turning MicroStrategy, turning your baby into this Bitcoin accumulation machine. And I've had this thesis for a long time that every single individual, every single government, every single company is going to try and accumulate as much Bitcoin as possible. That is the ultimate goal, and most just don't realize it yet, and the people that realize it first have the most to gain. Since you've embarked on that strategy, we've seen over the last, it actually kind of took a little bit longer than maybe even you expected. It definitely took longer than I expected, but we're starting to see smaller public companies around the world try and adopt a similar strategy. I'm kind of curious how you think about that, because to me, I'm not going to answer the question for you. How do you think about that? These smaller public companies. I mean, one example would be the Meta Planet that's happening in Japan, where they just said we're going to do the MicroStrategy thing in a press release, and the stock kind of just goes wild.
I've got a chart that I tweet, and the chart shows that bonds are minus 5% ARR for the past 4 years, and Bitcoin is plus 55%. So if you're an operating company, by law, you're only, up until January of this year, by law, you had to invest your excess capital in treasuries. and you couldn't invest it in the S&P index, and you couldn't, an operating company can't reasonably hold their excess assets in real estate, timber rights, sports teams, and Apple stock. The reason Berkshire Hathaway, for example, has so much cash is because they can't buy the S&P index, and they can't buy more Apple stock because they would trip a 40% covenant or a limit that's put in place by the SEC 40 Act. And if the company gets more than 40% of its liquid assets in a security, it's no longer an operating company, and that means it can't take on debt, it can't issue options. It basically blows up the company. You become an investment trust. So for 100 years, 80 years, the law forces operating companies to hold their excess capital in an asset which is losing 5% of its economic energy, 5% of its purchasing power per year. And when 2020 came along, we were pushed into Bitcoin space, but there were three crippling defects, three crippling things that keep a company from swapping out bonds for Bitcoin, or basically putting Bitcoin in and bonds out. The first thing is you need the SEC to endorse it as an institutional or a legitimate asset class, a digital commodity, and not a security. It's either illegal, because you can't. It's illegal to own Apple stock. And it's definitely, you don't want to have an unregistered security. So we had to have digital commodity, first step. And we kind of got 75% of the way there in January. It's not a perfected endorsement. It's it's a grudging endorsement, with reservation. But we crossed the event horizon. You can't turn that back. The second thing that's required is fair accounting. You can't invest in something that you only lose money in and you never make money in. Just, it's simple, right? No one wants to invest and always lose money. And it's definitely, you don't want to have an unregistered security. So we had to have digital commodity, first step. And we kind of got 75% of the way there in January. It's not a perfected endorsement. It's a grudging endorsement, with reservation. But we crossed the event horizon. You can't turn that back. The second thing that's required is fair accounting. You can't invest in something that you only lose money in and you never make money. It's simple, right? No one wants to invest and always lose money and never make money. But the accounting rules before January were you can only lose money in Bitcoin. And so nobody is going to buy an asset that always gets written down and never gets written out. And so that's optionally fixed in January. That's mandatory, fair accounting in next January. That's the second leg of the stool. And the third leg of the stool is Google can wire $1 billion to JP Morgan every month and say, put it in T-bills. And it's like 15 seconds. And if JP Morgan loses it, it's JP Morgan's problem. The status quo right now is Google would have to wire $1 billion a month to Coinbase, while the SEC is trying to put Coinbase out of business, and they'd have to cross with Cross River Bank, like a bank you've never heard of. That's the only bank that will actually take the wire. So the CFO of Google is not going to be so interested in wiring billions and tens of billions of dollars to a crypto exchange as a custodian. They want State Street, they want Citigroup. Citibank is the successor to National City Bank. National City Bank was run by the brother of John D. Rockefeller. It was the Rockefeller Bank. So if you want a sense of how long these relationships run, 30 years is a short period of time. So the third piece we need banks to be able to custody Bitcoin, and then they can buy it for you, sell it for you, loan money against it. And then in that world, you will be able to get a margin loan at SOFR plus 50 basis points against your Bitcoin. You will probably get 5% interest. You'll probably get the same interest rate on Bitcoin as you get on a money market fund. And if you had those two things, then a corporate it's like $100 billion of Bitcoin going up 20% a year, yielding 5% with no risk.